Yo, what is good, boys? Welcome to a video. Today's gonna be kind of different. We're stepping away from the psychology videos and we're gonna be jumping into the actual charts itself. If you guys don't know me, my name is Mark. Nice to meet you guys. And yeah, the whole goal here is just for all of us to make a shit ton of money, right? That's everyone's goal, and to learn more about the markets, right? So you guys probably just came from my psychology video. I think that psychology is 99% of, well, 95% of trading. Um, Trading is pretty simple, right? You see a model, you take it, and you take your entry, and that's it. Set your stop loss and make sure that it's a profitable model that has a pretty decent win rate and it has a pretty decent risk to reward, right? That is all you need, right? So it's pretty simple. So yeah, in this video, I'm going to be explaining how I trade my model, how to find the levels that I trade, and how to utilize them, and what I want to look for, what conditions I look for when I'm about to enter this type of trade. So there's various ways to find levels. The main ways that you can use, um, the main ones that people really use is the Fibonacci tool and Quant Tower, and also the the main ones that my mentees and that I use, the 55 levels. So today we're going to be going over the 55 levels. Um, so uh, the reason why this works is because it's the last 5 minutes of the day, right? So if you guys look at the bottom here, uh, there is a ton of liquidity being left out when the market closes. So by 3:55 Eastern, right, the day's high and low reference points are already established, right? Um, Price often gravitates to these pools and facilitate large orders, right? And also that 5 minute window, right, is the last chance for bigger players to engineer liquidity fulfilled before the bell rings and before the market closes. You push price above or below obvious intraday levels to trigger stops and obviously to collect orders, right? Retail traders react emotionally to these sweeps, chasing breakouts that quickly reverse, and my model exploits that trap by waiting for the sweep and then fading it, right? You could also use, I don't know if you guys use this, but we're going to be going over this as well. Delta, right? To show for confirmation, shows you where large orders are being aggressive and where they're being absorbed. If the sweep happens into stack delta zone, it suggests a true liquidity grab and not a breakout, right? You could also use SMTs, so 55 levels do sometimes create SMTs. And if NQ sweeps the high but ES doesn't, or vice versa, right? Obviously, it's followed by a reversal right after, right? So if you guys don't know SMTs, it's pretty simple. It's just a divergence in price, and you're just looking for the divergence in price. And the thing is about this is that it's a volume time-based edge, right? So volume and order flow are systematically higher in that window every single day, as you guys can see. Almost every day, there's a ton of volume being put out, right? So obviously it's a, you know, means that it's not random, but it happens every single day and it's repetitive. So this is a way you can, utilize what the market's giving us, and it's pretty easy, right? Once you learn how to use it and utilize the levels. So if we go to Monday, we can see here that at 3:55, and also the best way to look for the level is on the 5 minute time frame, right? So for context, this used to be an age assessment strategy. In October, I did over $15,000 with this, and um, yeah, I was able to get my first payout just using this strategy. So if you guys see here, right, we had a pullback, right? This is at 3:55, ton of volume being printed, and as you can see, price traded up above it, and then we sold off for around 100 ticks. So typically, what I used to do is I just used to go for like a one. Here, I'll show you what I. So I would just enter off of the level. I'd go for 100 ticks with a 50 tick stop. That's what I would do every single time, right? So I just go for a 2 risk reward. And if I partialed here, then I'd go for an area where we can possibly deliver to. Sometimes we would deliver there, sometimes we wouldn't, but it's not bad sometimes to take your profits and leave. So all I would do is just target a 2 risk reward and be done for the day. So which is like 100 ticks on NQ, and yeah. But now I figured out that there's a way to utilize the model um, during New York. So this is one of the ones that I saw. So at 7:15 a.m. we had an SMT here. We had an SMT here, right? So NQ, you know, didn't take this low. If we go on ES, we go on ES, you can see that it did take the low, right? So typically, what I would look for that is an A plus setup is if we sweep a kill zone and tap into a level. So what I like to see is I like to see an SMT, right? But before the SMT, I would like to see a sweep. Doesn't matter if it's on ES or an NQ. And what happens is after that, we would tap into that kill zone. We would typically trade up into a 55 level and have a reversal, right? So that's what I like to see. I like to see that exact model play out. And there's times where it does happen, and then when it does happen, those do give me the cleanest setups. Um, but as you can see on the NQ, NQ did take out this key low as in swing low, whatever. So you know NQ took out this key low, or no, ES took out that key low, and NQ did not, right? So there was also another SMT. So obviously, coming into the day, I'm bullish. So what people don't understand is that these levels you can take re-entries off of. So as you can see here, it was chopping through it. Obviously, you're not going to be taking an entry just because we tap into a level. It doesn't make sense to do it. There was two S&Ts here, and you'll see what I mean in a second. But a 1 minute time frame, we had a pullback, right? We had a pullback there. So obviously, you could take an entry off of that. Let's say you did take an entry, you have a 50 tick stop. So like, your entry does not have to be perfect. It can be off of a pullback like this, and this is what I usually do. Sometimes I would do this, or I would get a really good fill, or price would be floating above it, and then we would tap into it, and then we would deliver. But it does not have to be perfect. So you see, we have 3 kill zones. This is how I get my targets for my trades, and sometimes you could even also take it off of another level. If there's a level above you, a 55 level above you, you can also take it off of another level off of there. So yeah, so you guys should always be taking partials. You guys should always be managing your risk. That is the most important thing. If you don't have that, you don't have structure, and if you don't have structure, then you're unprofitable, right? You need to be managing your trades. So, oh wait, my bad. I meant to do this. So let's say I take an entry off of this, whatever. Have my stop, right? $250. Let's do let's add another one. So let's say here I'll take one off at this London high, and I'll go break even. As you can see, trading up into it, came back down, gave you another re-entry, right? This one would have been cleaner off of this little pullback. So as you can see, we hit London high. I'm gonna take a partial off there. Oh, never mind. There we go. So took a partial. Should have walked out with $1,000. Ended up walking out with 2,000. And then we also have our TP, which is uh, New York lunch highs. Let it play out. All right, boom. And what happens after that? We reject off of New York lunch highs and deliver and tap back into the 55 level again, as you guys can see. So it gave you another re-entry for New York AM Open. Price came down, rejected off of it. Let's see if we created an SMT. We did not create an SMT, but price, I mean, we kind of created this. Yeah, we did create an SMT. New York, or NQ, sorry, took this low here. ES didn't, showing that we want to go higher. Could have taken this 55 level. It's key low that got taken out, whatever. Um, and then we delivered to the upside again, right? So just showing you that these levels, they do play out multiple times, and they will play out multiple times. You just have to pair it with an entry model. If you don't have an entry model with it, then there's nothing to take the trade based off of it, right? So pretty much you can take this trade off of a level tap, sweep on liquidity, right? Tap into level, right? Show an SMT. Say there was an SMT there, boom. You could take a trade here, boom, right? Let's say there was a kill zone sweep. This is what I want to see. Do this as fast as possible. So let's say this is like Asia lows. Um, Price sweeps this Asia low. Okay, this is right here is Asia low. So this right here is Asia low. There's a 55 level below it. Price taps into it, but on ES, as you can see, boom, boom, boom. ES didn't take the low out, so there was an SMT between here and here. So as you can see, NQ tapped into the 55 level after they swept the Asia low, and we tapped into the level. This would be my ideal entry. So this is what I would look for personally. And you could target an opposite kill zone, or you can take it off of a pure SMT, and that's something you could also do, right? There's a key swing low here. Look for that to get taken out. Gets taken out. We show a reaction. You could take an entry off of that. Your entry does not have to be perfect. Reminder: your entry does not have to be perfect. You could have waited for the reaction, took an entry here. Obviously, your stop would be bigger, but if your draw on liquidity is right, it's gonna pay out, right? So that's what I want you guys to understand. That's how I use the levels, and pretty much the way to find the levels is pretty simple. Like I said before, you just go to the 355 candle where a ton of volume was created. You mark the high and the low out, and yeah, that's all you have to do, and just wait for price to trade up back into it. There are levels that don't work, and that is completely okay. That is why I created an indicator, or somebody created an indicator that um, marks out all the levels that are key and which ones aren't, because there are a bunch of filler levels. So as you can see, this we had levels up here, price did utilize them, right? And we also have levels down here. Down here there was a bunch of levels, but then underneath it there weren't that many levels. So there are ways to, you know, for these days where there's no levels to take trades off of, you use the quant tower, right? And that's a whole different thing that we're going to be going over. But yeah, so it's pretty much it for today's video. It's pretty simple, and it's really good, and it gives you high risk reward, high probability trades. Pretty much tells you where the move's going. You just have to pair with a couple of confluences, and it's that simple. So yeah, if you guys have any questions, you guys can, go to my Instagram and DM me, and we can, hop on a quick call just to go over it really quick. And yeah, my Instagram is at marktrades, MARCTRADSS. And yeah, it's pretty simple. So if you guys have any questions, just shoot me a DM there. And yeah,